Let's talk about Hinduja Global. Well, the company has recently concluded two recent acquisitions. How's the business ramp up happening right now? We have the management at Hinduja Global Solutions, Partha DeSarkar, the CEO. So thank you so much for joining us. Let's talk about the recent acquisitions that you've made. How's the integration coming in? When do you intend to complete the same?
So this is our fourth acquisition in the last 5 years. And we generally have a very specific 100-day roadmap, which is almost, we call it a 30, 60, 90-day roadmap for integration. So that covers the aspects of financial integration, business integration, human resource integrations, systems integration, a whole lot of it. We have an M&A team with each function head representing the integration from the HGS side. And we will also have people from OLS side who will be heading their functions and the integration on their side. So there is a roadmap with specific deliverables that covers how we are going to integrate the two companies across the globe.
Let's extend that theme a little bit. Let's talk about the acquisition strategy that you have. I believe you've set aside a certain sum of money for more acquisitions. What will be the size, the scope? What kind of verticals are you focusing on?
You see, we've got a four-pronged acquisition strategy. One is the acquisition to gain scale, which is doing the same thing with a bigger scale. Then there is acquisitions which are aimed towards getting into new markets. So if you look at what we've done with OLS, that is specifically to gain access to the Canadian market. Then we've got the third theme, which is to gain access to new competencies. So if you look at what we've done with HCCA, which is the human resource outsourcing firm, we did not have a presence in that space. So we acquired HCCA from 3i InfoTech to get into that space. And the fourth dimension is getting access to newer low-cost destinations. So our first acquisition that was done in 2004 gave us entry into Philippines. And that's the strategy that we are looking for, to acquire low-cost delivery centers in destinations like China, Latin America, nearshore to US and Canada, and even in the European region. So that's really the four-pronged acquisition strategy that we're using to scale, access new markets, access new competencies, or access new low-cost destinations.
Out of all these four, which will be the focus areas as you go on making these acquisitions?
There isn't any specific priority or specific preference over one over the other. So I think we are now really geographically diverse. We have one of the few Indian firms which have spread ourselves so globally. I would say that our preference over the next year or two would be to increase the content of non-voice work in our total delivery capability. So that's something that we are working on right now. Having done OLS, which is again pure CRM and therefore a lot of voice, we believe that our portfolio has now become a little voice heavy. So we would like to diversify the portfolio and get into more non-voice work.
As far as the headcount addition is concerned, with these acquisitions coming in, how do you plan to ramp up your headcount?
Yeah, so we are already about 22,500. I would say that we would like to be at about a 30,000 range in the next 18 to 24 months.
Also, if you look at the geographical mix of business change with the proposed acquisition, how would that be looking like?
Yeah, see, what happens is voice, there are a lot of advantages of doing non-voice work. The advantage number one is the fact that you're able to rotate the seats almost twice, so it gives you better utilizations. Then depending upon where in the value chain you are doing the non-voice piece of work, typically revenue per head count can also be maybe about 15 to 20% better than what you're doing for voice. So that's the typical characteristics of non-voice work as you compare it with voice.
Let me stay with that geographical mix. How does that change?
Yeah, see, what happens is we had overweight on US. So at one point of time, 100% of our revenues would come from the US till we diversified in the Indian market. So as things stand, even beginning of last year, 85% of the revenues came from the US. Now we are at a situation where so once we did the acquisition in UK, which is Careline, the contribution of US to our overall revenue pie became 75%. 12% was Asia and 13% was UK. After the Canadian acquisition is done, this is going to improve even further. So US will go down to about 60. Canada will contribute about, let's say, 15 to 20%, and the balance will come from Asia and UK.
Finally, talk about the US and the European markets. They're in pretty bad shape. What will be the probable impact on the business?
See, that is something that we will do anyway. The whole idea is to be geographically spread so that you don't have unbalanced dependence on a particular geography. So I wouldn't say that the current situation in the Western markets are causing a huge amount of concerns, because if you look at it, that's more government finances problem, that's more a problem with the banks in those particular areas. If you look at corporate performance has been as strong as ever. Companies there are flush with funds. Despite the situation, what's happened in the stock market meltdown, it's not necessarily a reflection of corporate performance. Quarter-on-quarter growth has been good, profitability has been good, companies are still buying out other companies. So long as corporate performance is not affected, we do not see any impact of whatever is happening in those economy in our performance. Because at the end of the day, if your clients are healthy, your business is healthy. So I'm not overtly concerned. Having said that, obviously one of the part of our strategy is to gain access to newer markets. So that's how we got into Canada, and that's how we got into UK. So that is an ongoing effort. It's not something that we are trying to do just because we are seeing the situation in Europe and US. So long as corporate performance is strong, we're not worried. We've got a good deal pipeline. Our growth, we will be exceeding 20% growth again. And we've done that consistently. Only in the year before did we dip to a teen level growth. Otherwise, we've grown consistently at about 20% levels. So I'm not concerned at what I'm seeing outside.
All right, so we'll leave it at that. Thank you so much for joining us there. Appreciate your time and your comments. The stock's up almost 1% as far as trade is concerned. We'll take a break right now. We'll come back and discuss more stock portfolios.